Hi guys, welcome back to the YouTube channel. In today's video, I'm going to be talking about what I do personally as an expat property investor, and also what I would probably recommend in my professional guidance on what you should probably consider doing as an expat property investor as well. So essentially, when you're living overseas, so expat, living somewhere such as Dubai, where it's actually tax-free, how does that impact the side of things when you're looking at property investment? Because if you're living overseas, does the UK properties, do you pay tax there? Do you pay tax here? How does it all work? And if you're thinking this, you absolutely are in the right place, because after watching this video, it's going to be completely clear how UK international tax works when it comes to UK property investment. So the first place to start here is going to be by saying that UK properties are always going to be taxed in the UK. It's a UK cited asset. As a result, whether it's owned personally through a partnership, UK limited company, overseas holding company, BVI trust, whatever it might be, it's always going to have a tax footprint in the UK. So if you own that personally, so if you're living in Dubai, for example, well, a lot of people are living in Dubai, so we're going to focus it all around the Dubai side of things, where actually there's 0% income tax. If you're living in Dubai where there's 0% income tax, but you've got a couple of buy-to-lets in the UK, well, how does that work? So actually, assuming you've got no other UK income at all, what will happen is you will still need to do a self-assessment tax return. And as an international, as a non-resident landlord, you'll have to be registered for the non-resident landlord scheme. Have a quick Google of that. Happy to help if you've got any questions. Reach out to me, drop me a DM, whatever it might be. You need to register for the non-resident landlord scheme. And actually what will happen is all your income and expenses as usual, plus your tax credit for your finance costs because they're in your own name, that will all get added up on your self-assessment tax return as usual. And then whatever's left, you'll still have your personal allowance, most likely if you're a UK citizen or the EA and whatnot. You will still have that 12,570, and everything else, any other rental profits you've got that after that 12,570 will simply be taxed at 20%, 40%, 45%, just as you're used to as a previous UK resident. Your overseas salary, so if you've got overseas salary and income, they will be exempt. So that doesn't get taken into account. You're a UAE taxpayer, you're a resident here, so it's only that UK source income that gets added up and calculated for this. It can get a bit complicated if you've got UK dividends, interest income, or even UK source director salaries, and that's probably when I'm going to say book a call with me, because I can't really explain it very well on a YouTube video without going into a lot of detail and probably pushing most of you guys asleep. So if you're in that kind of complex bracket, definitely get specialist guidance. But if you've got one or two buy-to-lets, this is exactly as it will be. So you'll pay UK tax in the UK. For a lot of people, you're gonna have your personal allowance. You'll pay tax at 20% on the rest, most likely. How does it work for a UK limited company though? Well, actually, if you're buying for a UK limited company, so what we mean is a company incorporated in the UK, then actually that company will be UK resident and it'll pay corporation tax on the profits of the property business. So currently 19%, where it falls into that £50,000 small rates band. Profits over 50 to 250, an effective rate of 26.5%, and profits over the 250, 25%. So it sounds a little bit complicated, but 20% there or thereabouts, that's what we'll be paying in a company. But the good thing about a company is you can actually deduct the salary you pay to yourself for managing it whilst overseas. Again, this is where it gets a bit complicated, because you have to separate out what you're doing as an employee versus what you're doing as a director, because director's duties can still be taxed in the UK, but the overseas employment aspect would be tax-free, so that can get a bit complicated there. But the long and short of it is, most of that salary that you pay will be tax-free. So now you know exactly kind of how the UK taxes property, whether it's in your own name or a limited company. But what should you be doing? So if you're living here in Dubai, should you be buying through your own name or through a limited company? Absolutely, that's the $1 million question. And I'm gonna say it depends, end the video there. Sorry guys. Just kidding. What I'm going to say is, well, it depends on what you're looking to achieve. So if you are planning on staying in the UAE forever, or certainly somewhere with lower taxes in the UK, well actually, as long as you're not intending to go back to the UK ever, well actually you can have a couple of buy-to-lets in your own name, use your personal allowance, use your basic rate band up, and as long as you don't go over that £50,000 worth of rental income, you won't ever pay more than 20% tax on those rental profits. You won't really have to worry too much about accountancy fees, limited companies, interest rates are still a little bit cheaper in your own name, and there you go, there you have it. That's probably the best way if you fall into that category. However, if you are looking to go back to the UK, potentially have employment, or ultimately you do want to scale and have more than £50,000 worth of rental profits, in that case you're probably looking at a limited company as the better way to go. So it really does depend on what you're looking to achieve in the long run as to the most suitable structure for you. And of course, this is very basic. Here we're just talking about immediate income tax side of things. Of course, you've got to consider capital gains tax, inheritance tax, asset protection. It can be fantastic to actually own properties in an overseas trust just for this reason. They are fantastic cash generating assets. Of course, if you've got them in a limited company or a name, you own those, you're at risk. So a fantastic way to actually protect it long term might be to either have the property owned directly in a trust or the shares in the property company owned by a trust, just so that you've got that extra level of added protection should things go wrong, you get sued by creditors, or when you pass away, well actually it's in a trust and the trustees can deal with it as you've directed them to. I'd just like to stop the video here to remind you guys about our Tax Smart Wealth program, which is all around helping you pay less in tax, structure your assets internationally, and ultimately build indestructible generational wealth. It's a one-on-one consultancy working with me and also our online training platform as well, where we will run through everything you need and work with you to get your tax reduction strategy in place and ultimately go from where you are now to the end result being indestructible generational wealth whilst paying the legal amount of tax, the legal minimum amount of tax. If you want to find out more about this, book a call at the top of that description, because I'd love to have a chat with you guys to see how I can help you. And that's really all there is to it, guys. So own name, limited company, you've got that information there. Which route you should go down obviously depends on what you're looking to achieve. But remember, even if you are still living in Dubai, you need to stay on top of the UK taxes. You've got property there, you've got wealth there. You do not want to annoy HMRC. They've got assets. They can quite easily take those from you, sell them on to pay your tax bill. So definitely make sure that you are staying on top of UK taxes, whether that's self-assessments, limited company accounts, when you sell a property, the capital gains tax disclosures, ATED. There's a lot of taxes to be aware of in the UK. But if you want to find out more about this, definitely check out our program, because we run through all of these to make sure that you are paying the least amount of tax, basically staying on top of your taxes, minimizing fines, and ultimately protecting your and your family's wealth. Hope you find this video useful. Do give it a big thumbs up, and also remember to smash the subscribe button. Until then, bye for now.